This conference will now be recorded.
Okay, this is Fatty Hemsey. It's 8:41, April 9th, 2021. It's Friday. Welcome. We're doing another of morning briefs. We're trying to do 3 of these a week. We try to open on Wednesdays to most people out there as a way of giving back. Hi, Jeff. How are you? Welcome. Um, and remember, it takes a tad of post-processing. Of course, then I get busy with trading, so it's not instantly posted. So if you want to be here early, want to go through these with me, with us, I suggest you take the link we send you for the invite and jump in. Okay. Aside that housekeeping, 2 webinars I'm planning to do. I'm trying to get back on the horse slowly. One is on PMT and one is on Happy Expert. As you know, we have a module that really perfected it. We have done additional work on it, but we have not sent it out. Yeah, this last month has been very difficult on me due to it's really messed up my sleeping. Once your sleeping gets messed up, the whole world goes crazy, including very hard to trade consistently. So I'm still this week. I've been on a simulator. I'll see today if I can make a transition. But I plan to be on real world trading on it's coming this week. And but I will alert you as always. I would say this is not a drill. This is not a drill. So you will know I'm trading live. It's just part of our transparency. Remember, 3 T's at HA: technology, transparency, and tech support. They're not going to change. So, all right, let's see. Econ data. Let's go to econ data. We had today PPI. We talked about it a little bit yesterday. Let's see how it came in at 8:30. Okay. Delayed at source. Interesting. Wow. Really? BLS has never done that before. I think one time it had to do with another time series with years back. Interesting. Delayed at source. So no data yet. Okay. We'll see if they update midday or maybe they'll pick another day. Captain of Dallas is speaking. He's the head of Federal Reserve at Dallas, and then that's at 12. I don't know. I have no clue about the wholesale inventories. Remember, this is the second week, right? Third week we're gonna have options. So next week is option expiration for April. So you're gonna have a little bit of data in the first part of the week. You know, this maybe May and Monday and Tuesday, and then it's gonna drop off. Nothing and going to almost nothing on Friday. And keep in mind, next Wednesday you could see a possible trend change. Why? Depends. I mean, people are buying a lot of our calls here. At some point, market makers are going to shake them, and then if the shake is too big, then they reverse it right into the Friday expiration. Now, again, this is next week, so I'm talking about 14 to 16 of April. Okay, tax day has moved to May, so we don't have the low volume that we seasonally see in early part of April. Keep that in mind. Okay. What else I have that I need to think about? Okay. Probably maybe we'll see housing starts. As always, we have to watch jobless claims. And no, those are early. GDP is too late. Factory orders are early. That's about it. I really don't see what else is going to be there. Possibly next week. Okay. Unfortunately, Econoday doesn't project anything past. Does not show more than 1 week. So we're hindered there. Let's go to PMT charts. Okay. Timer chart. We're up there. Absolutely. We're up there. We made new highs, another new highs yesterday. And market's dropping. Yeah. Okay. And there we go. Hold on. And there's a huge divergence. You see that, right? The readings. Now, they're minuscule in terms of the percentage that's lower, or how we want to, not percentage, but whatever on McLaren, whatever your scale is in terms of not a scale, but whatever your reading is on that indicator, higher, high, lower, and again lower while we've gone higher and higher and higher. So there's a little bit of a divergence has developed, but remember, on the upside, topping is a process, and this could take that several failures before we actually see the index subside. Comment from Peter. Bonds are telling us PPI was hot. Someone knows. I see. Gotcha. Okay. Well, PPI is not in yet, right? So, but when it comes in, yeah, I'm with you there. Thanks, Peter. Great commentary. Appreciate that. All right, let's go to DT. We're sitting at Russell is sitting at center line. I mean, at 50 bar. That's where we're getting a near zero or slightly positive DT. For the 50, obviously, we're still pretty strong. As a matter of fact, the strongest we had DT was at 40%. Was separation between this high and this 200 day. So very, very strong up here. Almost scary saying this has to drop. And it did. Of course, it did. So once these trends get out of the norm, established over the years, we have to respect that. Right now, Russell is not keeping up with the NASDAQ 100. Part of it could be interpreted that. I'm not saying this is happening. Nobody knows. But it could be that maybe we were so high up there that the big boys are hiding in the big names. You know, big established NASDAQ 100 names versus overall Russell 2000, which is a 200. 2,000 of the small caps. Okay, we're okay on SPX and Trans. Trans has been keeping up. The economy looks better and better as we go forward. Of course, majority of that is due to vaccination. As vaccination speeds up, I think there's an overall comfort level out there that you can see it in the employers, CEOs, small business owners. That's why we had 900,000 non-farm for March, which was great, which was absolutely great to turn around this wrecked economy. This is, if you look at the damage here, this is really bad. This is worse than 2008. So we have to come back. It's not going to be easy. The thing I worry about, back of my mind, what keeps me up while I'm running is that this may not be enough. Yeah, these vaccines. Yeah, no science for it. Yeah, that we may need to have boosters. We may need to have additional. We may be good for 6 months to a year. How are we going to defend ourselves against variants? And there we go again. Again, we have to come up with a new vaccinations for the variants, money to purchase it, and getting out to people. But we're hoping that we're going to be concurrent with what's going on now, so that the momentum we have now is not lost. And we get some people back on the payroll, working, getting off the unemployment, and also paying taxes. Those commissions come in, we can withstand pressure, but we can't go to another lockdown again. It would be a disastrous. We can't keep borrowing 4, 5, 6 trillion a year. It's just not going to happen. We're really building a huge amount of debt. One day this is going to come to roost, and it's going to be devastating. Yeah. When we get to treasuries, you'll see. Okay. We're on buy and buy now. Obviously, this rotated up. The short-term daily mechanical system went to a buy at 39.58 on the 30th. On 30th it did. And let me take a look here one thing. 30th. Okay. All right. So I was okay then. Yeah. And the next 2 days that burned me on the PMT. I understand. But, well, you can't win everything. Remember in 2018? Yeah. I went 4 weeks of not being able to make a right trade. 4 weeks. Everything I touched was bad. So did it shook me? Absolutely. But I said self-confidence shall win. Stick with what you know, and just pull back, regroup, and then come up with a new game plan, better attack plan, and then stick to your self-discipline and move forward. And that's what I have to do now. So these 2 days have been very expensive for me, but we shall endure. This stuff is not going to shake me. We shall endure. You have to have your self-confidence. Okay, we're not getting huge readings in the 52 weeks highs on S&Ps, even though we're way, way up there. But usually they peak early. So if that's the case, we should be hitting a plateau there. I don't know if you get the trace time of digest. Of course, they not publishing anything more, but in the early January, they printed our targets by all timers for the coming year, and mine was 4250, I believe. So, are we almost going there? Yes, we are. You can see the 4 sigmas at 4150. I think that my target for 4250, or may have been 4200. 4200 to 4250 was for June 30th, because we give 3 targets: one for March 30th, June 30th, and then December 30th. So, yeah. So whatever the last day of the month is for that quarter, March 31st, I guess. March 31st, June 30th, and December 31st. Yeah. So 4250. Maybe I was timid and I'm underestimated that. We'll see. Time will tell. I've never got that right. I should say that. Okay. It's a wild guess. So I'm much better in the shorter term guesses. VIX. Okay. We fell down to a lowest level yesterday, and today we're even slightly below that. The low today, 1620. That's encouraging. We really need to get into 12s and 13s to get where we better reflect where S&P and NASDAQ are. Okay. We're trading CLK 21 contract. We should be on M, I'd say, yeah, by Monday. We should be on Monday, and that maybe next Friday. We'll see. Monday, this coming Friday, the expiration, or the following Monday. Yeah, not the 12th, but definitely by the 18th rollover. One of these days we should be rolling over. I think 16th or 19th. We'll be on M contract, the June contract for deliveries. Okay. We're coming down on VIX. Not bad, but not good enough either. That's still high, in my opinion. Here, if you look at it, you'll see. We should forget this year, but if you go back, we should be lower than this. See that? Yeah. This is some of the normal areas. If we go down there, what's that for last year? Yeah. We should be on sub 20. We should be at sub 20 for NASDAQ. NASDAQ is always a little tick higher in volatility than VIX is. This is VXN. And by the way, this is an old VIX, so pure volatility measure is being shown here. So even this is also elevated. Moving forward, SQ. SQ again, tail risk on a large SPX players on the put side, excuse me, and it's whipsawing here, just back and forth. Tight range between like 140 to about 144 here. You could see from the center line that's very flat. That lowers the chance of expected downside move. Okay, does that make sense? It lowers that chance in the sense that from what we can see here. Hi, Michael. How are you? What that means is that market is not currently pricing a huge drop. Maybe adjustment, but not a huge drop. And also, you have a window forward, right? Historically, from what we've observed empirically, when we get to 3 or 4 sigma and above 145, 150 area, yes, we have a move to a downside coming, but that's usually between, I'd say, 6 to 12 weeks forward. Between a month and a half to about 3 months forward. I'd say with a median of 2 months is a good estimate. So if you peg it from here Hold on. Sorry. Oh, come on. Okay, dude. Come on. What's that? Okay, 20th. Okay, from that's just about spring. Just about the beginning of the spring. So if you take it from there, this says if we have a problem, it's going to be somewhere around tax day, the new tax day, mid May plus or minus. Give yourself a few days. This is a wider. This is not like spring equinox or fall equinox where you could say plus or minus 1 day. That neighborhood has to be opened up in terms of estimates. So you would be looking at maybe I don't know plus or minus a week on each end. So mid-May we could have a problem. We shall see. That's what the data shows right now. By the way, this does not keep on giving you additional confirmation. This flashes, gives you a signal, and then goes quiet. And that's the trick. You get complacent. You think, okay, this is not giving a signal. It's not going to happen. Last 3 times it has happened like a clockwork. It gave a signal, went away, said nothing, and then again, finally, boom, we rolled over. Now, here's the problem. Why? Always ask yourself, as I do, what's the catalyst? You've heard me over the years in these webinars. I keep on asking that. Ask yourself, what's the catalyst? Be prepared to watch for a catalyst. Be prepared to take action when you see it. But keep in your mind what the SQ said and did when. Okay. It may come, it may not. We don't know. But when it does, it's going to be strong. So you got to look at for some sort of a bad news to convince everybody else to see what the big boys are doing. Now, they're not sure of anything either, just like us. But they're just buying very, very cheap, out of the money puts on SPX. Remember, this is a tail risk, but a lower tail risk. Each bell curve has got 2 tails. This is the lower tail risk. So in terms of index, you'll be talking about, you'll be probably looking at this area. They're buying in this area. Way past 4 sigma, or even on the weekly basis. Let me come here. Get a feel about it. So you'd probably about 3,500 area. They're buying some stuff in this area. That's 500 points. That's 5,000 points. 5,000 Dow points. Yeah, that's where they be buying the dirt cheap and they're holding on to. If it works, major payoff. Major payoff. Okay. And also nice hedge. Forget trend TD. Okay. Rendezvous point continues. We're going to a rendezvous point on this is a stock RSIs for where these 3 coincide and usually we begin to roll over. It's 9 o'clock. Let me push forward. SP2, my favorite indicator, is 86 now. This is high up there. Again, as before we have seen, we can sit up here for a while as a topping form. Bottoms are different. The fear versus greed is totally different profile. So right now we're in the greed mode, and it could continue. But this is a good reflection on, where the current chips fall. Anything above 75 is overbought. We're at 86. I've seen 90. I've seen 91, but not much after that. So we're up there. Maybe next week by option expiration we'll see a change. Don't know. Again, keep track of econ calendar. Keep track of the charts. Yeah, remember, trust your indicators. As long as they're decent indicators and you not put your bias ahead of it, the indicators are going to tell you what you need to know. Treasuries. Okay, very quiet on the front end. Actually, very quiet everywhere. Long end too, but a little bit of activity on the 5-year. Again, short-term banks, cars, houses, insurance obligations, long-term pension funds and so forth. So that's where we are. Fairly flat recently this month. These are daily charts on a monthly support and resistance. And look how they get hugged at these levels. So we're still near the pivot. The yellow is the pivot line. Okay. The fast rise we had has gone away. But as Peter said earlier, the PPI most likely is a little bit higher, or I don't know if If they don't have the data, they don't have the data there. But let's see, is he still not showing anything? Any update there? No, still no update there. Okay. Yep. So, but already market is not market takes no prisoners. You know, you shoot first and court martial later. So it's a little bit higher right now. Yeah. Okay, let's go to last chart for PMT, which is our scoring indicator, the percent of stocks above 200-day. Again, we're at 95 now. These are record readings. I've never seen anything this high up. Okay, record readings up here in a long time. I think maybe after 2008, we may have had one reading there. Not in 2008, but would be probably late 2009-ish or early 2010. After that event, one time we got this high, or maybe around 90, but I don't recall 95. I've been looking at this chart since I'd say about first quarter of 2008, before the mess. At least before the public knew there was a mess called the subprime. Okay. Okay, so that's where we are, 95, up there, really up there. And there's a divergence here that failed. Well, we dropped, but not much. But remember, this is again same thing. Tops are tough to pinpoint. Bottoms are very sharp. Bottoms are extremely very sharp because of the fear. Okay, and keep, as always, you have moving averages. Look at the separations. Okay, thanks. Okay, overnight. Let's go to overnight charts. Here's the overnight charts. Okay, 30 minutes, just to see sigma levels where we are, and notice how notice where they're bouncing. I keep this 24/7 or 24/6, and I do look at it during the day every so often. Every time we make a move of any substantial size, either way, I want to know where my sigma levels are on the 30 minutes. Don't trade on them because I don't have an account that big. To trade this, you need to have a very large account. This is the mainstay of the very large characters. This is what I do, which is, again, this is a webinar I want to give you guys on the expert with these dots on it, which is DMZ with the bubbles and the dots. Dots are ATRs. And you could see we're beginning to rotate now. You know, we ran into the dots. The dots are in between the bars, so should be a little bit lower. Then we get a hammer, and now should possibly, we see a possible rotation, and then confirmation, you get both of them. DMZ, if this has to change color, it hasn't yet. But look what's happening with the CI diffs. CI diffs are beginning to show that the massive negative acceleration we had, or I should say deceleration we had, is waning as rotating back. And there's a V bar there, big volume, big reading on CI as rotating. So we should slowly base here and come back up for maybe pre-open. I don't know. It's 9:05 right now. Okay. Any questions for me? Oh, there are four comments there. I'm sorry. Oh, PPI just released. I see. 1% on the highest estimate. Okay, so let's go there. This is Peter is reporting on the PMI. Okay, let's go there. Refresh this one. This should update then. Okay. Okay, 1%. Whoa. Oh, Murray, that's it. Very hard. Yeah. Year to year, that was 20%. Was it 3.8? That's okay. Yes. Final demand 4.2. Okay, Chief, I appreciate that. Any questions for me? Again, we have an issue with our V3, the changes they've done to Chromium. We're working on it, but we can't tell you exactly when we're going to be back on. Give us a day or two. Use the Skype, and we go from there. You're quite welcome, Don. We'll see you. All right, guys, have a good weekend. I'm coming back. It's not easy, but I don't give up. But I've got to get this psoriasis under control. Okay. And mainly sleeping. Sleeping has been much, much better. Last night was a little bit late, but that's because I was so worried about this second shot for coronavirus today. Okay. Thank you all. Have a great weekend. We're stopping the recording now.